Hello everyone, my name is Gokul. Today I'll be going over the topic called different flavors of product management. Product management as it stands is such a multi-constituent role that it often requires one to wear multiple hats. And the kind of hat that you get to wear varies from company to company or even sometimes team to team. And it also heavily depends on the phase of growth your product right now is in. And to top it all off, if you throw a different sector into the mix, you're soon talking about different skill sets, mental models, challenges, and so on. So in this session today, I thought I'll share with you guys a glimpse into what a product management role might look like in the following three sectors. They are SaaS, Fintech, and trust and safety. I'll preface the talk by saying that I've tried to compress what could essentially be three separate sessions into one 30-minute session. So we will be going over a lot of topics at a reasonably high level. I highly encourage those who are interested in learning more and diving deep into any one of these areas to leave a comment or connect with me on LinkedIn, and I'm happy to go through the details. Before we begin, I'll introduce myself. My name is Gokul, and I'm currently a product manager in Amazon's customer trust team in Singapore. In my current role, I'm focused on making Amazon the safest and most trusted platform for customers, brands, and selling partners, and also the best place for anybody to come and build a successful business on. Prior to Amazon, I was a product lead at Funding Societies. Funding Societies is Southeast Asia's largest peer-to-peer lending company. Over there, I led several platform initiatives for the startup. Prior to that, I was a PM at Microsoft, where I was working on Microsoft Teams product. During my time there, I built several experiences in the activity feed and notification space of the product. For the purpose of this talk, I'm going to heavily draw on from my personal experience building products in these three very different spaces where I operated at different scale and capacity. By the end of the talk, I hope to leave you a little bit more informed about each one of these three sectors and hopefully leave you in a position to decide whether this might be of something of interest to you, given the various nuances. A quick caveat before we begin. The thoughts shared in this talk are purely my own and personal, and they don't represent that of my current or any of my previous employers. With that said, let's begin. When I say what is different about SaaS or lending or trust and safety, what I essentially mean is what's so different about them as compared to, let's say, rest of tech. And when I say rest of tech, I essentially mean all the consumer applications, be it your gaming apps, social media apps, entertainment apps, or like some even your personal devices, hardware, etc. In this presentation, I will go in a sequential order where I'll start with SaaS, followed by lending, and then I'll end the session with trust and safety. And when I talk about each one of these sectors, I'll talk specifically about 3 points. The first one is what does a typical PM do in that space? The second is what are some of the interesting nuances about that space? Third is what are some of the unique challenges a PM is likely to face when he or she is in that specific sector? Let's begin with SaaS and let's align on some common definitions first. So, what do I mean by a SaaS product? I think a SaaS product is built just like any other product to fulfill an end user's need. However, in this context, the end user's need are in a particular business context or within an organization. So essentially, these are products that enable other businesses to serve their customers better. Classic examples include your CRM app, your communication apps, just Slack and Zoom, your expense management app like such as Concur, your HR systems such as Workday, etc. If you're a PM in this space, you're pretty much operating on a different scale compared to, say, your peer in the consumer tech. If I had to venture a guess, there are more than 500,000 listed companies in the world at this point in time. Even if all the users across all those companies begin to use your product, you're still talking about a few 100 million users in the best case scenario. Whereas the best case scenario for a consumer tech app, you're talking at a scale of a couple of billion number of users. So with that said, let's compare how being a PM for SaaS is different across a number of factors. We'll use factors such as who the users are, how does growth look like in SaaS, how does retention look like in SaaS, who are the key stakeholders you might engage with, and how it's always different from, say, the rest. So let's begin with the users. If you're if you're a PM in the consumer tech world, there is essentially no difference between your customer and your end user. However, with SaaS, there are two different stakeholders altogether. When you're building a SaaS product, as important as your end users are, so are the IT admins and the CIOs of the organization to whom you're trying to sell the product to, because it's ultimately they who decide which products get adopted and which ones don't within their organization. Therefore, if you're a PM, you're not just building the core functionalities for the end user, but you're also contributing to the features for the IT administrators of these organizations. And these are essentially controls and knobs for the IT admin to deploy your product, phase it out in stages, or sometimes even apply customization which are relevant to that specific organization. Moving on to growth, typical consumer apps, top of funnel or growth loop, would generally involve things like referrals, promotions, network effects, etc. Most of these are not relevant in the B2B or SaaS world. The effect of network effects is pretty much negligible, and so is the same for referrals. How heavily one company uses your product has very little influence on how or to what extent other companies will use the same product, right? So therefore, the two biggest growth levers that you have for yourself in the SaaS world are creating in-product loops, which naturally drive a lot of organic retention, or you end up solving a lot of adoption blockers. Because when you're building a SaaS product and taking it to different companies, each of these companies are going to have different requirements from that product, and solving for those different requirements so that they go ahead and adopt it is probably the most straightforward way you can achieve growth at scale in a SaaS world. Having said that, it's very important that you stay closely in touch with certain key stakeholders who are much closer to these customers than you are. And these are generally your customer success team or your account managers. In a traditional SaaS world, your top 4-5% of your customers bring more than 80% of business for you. So it is very important for you to stay in close touch with your CS team or your account management team to understand what is working so well for these 4-5% users, so that you can try and replicate the same for the rest of the user cohort. In terms of retention, a typical B2C products retention, it's sort of taken care of if there are enough users there on the product, and if there is network effect operating at scale. However, in a B2B world, most SaaS companies try and create what is called as a path dependency, where they try to seamlessly integrate with several first-party as well as third-party systems of the end customer. What that means is, I'll take my favorite example of Slack. If you're Slack and you want to take your product and sell it to a specific company, the company who's buying it from you is not just going to use Slack. They're probably already using G Suite for their docs and spreadsheet needs and email needs. They're probably using Confluence for their documentation needs and wiki needs. They're probably using Jira for their ticketing. Slack is just one of the tools. So how seamlessly Slack is able to integrate with all these various tools largely defines how inseparable it can become from the day-to-day workflow of your end customer. And this is one of the cleanest ways where you can achieve retention by making yourself very hard to get rid of by seamlessly integrating with everyone else. Moving on to the next aspects of what's so different, privacy, compliance, security. Basically, if you're in SaaS, you're in the business of helping your customers be compliant in the geographies where they operate in. So in any given quarter, it won't be surprising to find 30 to 40% of your roadmap sometimes be taken up by initiatives around privacy, compliance, regulation, security, etc. Because these are just table stakes, and you just got to do it for you to be able to compete with your competitors. So that's something of a unique feature. My favorite one is the next one, which is customization versus standardization. Different companies, like I mentioned before, will have different needs from your product. After all, they're paying the money for you. So they're going to be expecting you to provide that customization. And your ability to stay flexible and cater to those different business workflows for your customer is extremely crucial to your product success and product's adoption to begin with that customer, right? Your engineers would love to standardize the product. You as a product manager might also think your product is much simpler when standardized, but you've got to sometimes listen to your customers as well. And it's a very different problem, funnily, in a B2C world, where Take Uber or WhatsApp, for example. There's hardly any customization. The product experience is pretty much the same for all the users. And it's such a stark contrast in the B2B world in terms of customers' expectation. Uh, Moving on to the last part, which might be unique to SaaS, is education. So this is again not a big deal in the B2C world, but in the B2B world, certain products are relatively complex, and you would want your customers to be trained to use your product. So you're generally big on blogs, you're big on how-to manuals, user manuals, you're big on video tutorials. I know a lot of SaaS companies even partner with third-party service providers where they co-create training material with them, and the third-party service providers would in turn go ahead to your customers and sell that as a training program. So that's a separate business model by itself as well. So again, the whole aspect around education is such a unique aspect of being a product manager in the SaaS space. So having gone through some of the unique nuances, let's walk through some of the challenges a typical SaaS PM would face. So imagine you're a product manager and you're working for a company who's a new player in the market where you're producing the SaaS software for. Getting your first few customers is going to be extremely hard because competition is so strong. And most of your competitors would have already scaled horizontally, vertically, and they would probably be so deeply entrenched in your potential customers' ecosystem that it's probably going to be very difficult for you to even find a small gap. Again, going back to my example of Slack, imagine your Slack. How do you go take your product and sell it to a Fortune 100 company who is probably so deeply integrated already into a Microsoft stack? It's extremely difficult for you as Slack to break into that customer. And for most customers, this is usually a this or that kind of a decision. So unlike a B2C world where you can have your users do multi-homing, where users can use multiple different competing apps, in a B2B world, because customers pay for it, it's going to be either this or that. And if you're a new player, it gets really difficult. And the best way for new players to actually crack a market is to go really niche in a specific sector or in a specific industry. Do a thorough research to understand what are some of the unmet, unarticulated needs that are still there in that industry, and try to add like a 10x value over there. And that's the best shot at like having any level of growth because of just the sheer amount of competition and how big the competition is even. One of my favorite books on this topic is Crossing the Chasm. I'm sure many of you would have heard or even read about it. It's such a classic playbook for any PM building 0 to 1 products who's faced with a similar dilemma. The last set of challenges under the SaaS space, the bar to ship a feature in SaaS is generally very, very high. Since your users are actually paying large money for your product, there is very little scope for you to be scrappy or experiment. Your products generally need to be resilient, scalable, and sort of bug-free. Edge cases in a B2C world can be deprioritized as a P100 for a product manager, but in a B2B world, every use case, every user flow matters, and sooner or later you're going to have to fix all of them before you move on to the next big functionality. And as a product manager, you might find this affect your iteration velocity. And that's something that we need to be wary of because it's part of the game. And I don't think there's much that we can do about this. The next point, like I mentioned before, your SaaS product is not used in a silo. So the more integrated you are, the better retention shot you have at. And then the last part, which is probably the nightmare for many product managers in this space, is migration. So every now and then you would have your leadership team sunset an old version of a product. And now the product manager and the development team will have to migrate all the users from the old version to the new version, or from the old app to the new app altogether. And migration is an activity that nobody enjoys doing. The customers, more often than not, don't think it adds any value to them. Even a product manager, unless they're extremely careful and tedious, it becomes very hard for them to get this completed. But again, it's one of those challenges that's just part of the game with SaaS. All right. We've seen the three-part problem for the SaaS. Now let's move on and discuss the same for lending as well. A few definitions out of the way. Lending products are basically products that are built to fulfill financial needs of borrowers and provide alternate investment opportunity for lenders who are funding those loans. Uh, just like your e-commerce, where you have the holy trinity of needs that are pretty standard and time-tested. Users always need better price, better selection, better convenience. Similarly, in lending, borrowers always need money faster, money cheaper, and money for a longer tenure. Similarly, your investors are always interested in opportunities which are low risk, high return, and short term in tenure. As a lending PM, you're of course going to be building various financial products catering towards these two user segments, lenders and borrowers. But what often doesn't get talked about is the amount of investment that lending companies make, both from a tech and product perspective, in building products catering towards the internal users of the company. And these are your finance team, your sales team, your underwriting team, your ops team, your debt collection team, etc. So let's look at each one of them in detail. So we already saw lenders and borrowers, but after them, you've got your sales team who bring in the sales leads. You have your credit underwriting team who do the loan underwriting. You have the finance team which takes care of funds flow, disbursement, etc. You have your collection team which is in charge of making sure they get the money back from the borrower on time. And each one of these guys will need application catering to their workflows. To be built by tech and product within the company. And this definitely does consume a significant chunk of the company's resources. Moving on to acquisition, from what I have seen, digital channels seem to be the standard staple for bringing in new borrowers. One of the interesting methods that fintechs also use is partnership, where I, as a lending company, might have the license to lend, but I don't have necessarily all the borrower leads. If there is another company who can bring in the borrowers, you can partner with them, get into a revenue sharing model, and fulfill those loans for those borrowers on behalf of that company. Moving on to growth loops in lending are, in my opinion, one of the hardest ones to crack. I'm saying this both based off first-hand observation within my company as well as reading a lot about it externally. I think part of the problem is how do you stay on top of mind? How do you stay relevant at the time of need for the customer, for the borrower? Because borrowers are not always thinking about your company all the time. How do you make sure that when they actually need, you're there to serve them? So that's a very hard problem to tackle. In terms of scale, similar to B2B or SaaS product, fintech products are generally not operating, especially lending. They don't operate at the scale as at the same scale as B2C, especially on the borrower side at least. So you're definitely like 10x, 100x, smaller in terms of your scale. In terms of metrics, nobody really cares about how much time a user spends on your lending app. People just want to come apply for the loan, get their money, and move on. So, as a product manager, your most important metrics are basically how quickly are you able to service a loan, how cheaply are you able to raise the funds for the loan, how much revenue are you able to bring in, how much cost do you save by automating some of the repetitive ops process for your internal business stakeholders. So those are going to be like some of your important, interesting metrics as a product manager. Uh, Again, similar to SaaS, compliance, license, regulation, the focus on security and resiliency, these are all extremely critical for you as a product manager in the fintech world and specifically lending world as well. You're going to be closely working with the monetary authority of the countries where you operate in, showing them the books. So you need to be working closely with your external audit, internal audit, regulators, and a whole array of different stakeholders. And again, granted, it's going to take a lot of like bandwidth from your engineers as well as on your roadmap. Moving on to retention, this is largely driven by how cheap the funding is and the quality of service that you're able to provide to the borrower, as well as for the investor as well. And then the last one is education. So I see that this is a space that is exploding day by day. A lot of companies are rushing into the opportunity of like getting into financial literacy, and I think that's something that is applicable even in the lending space. Having seen like some of the unique aspects, let's look at what are some of the challenges a product manager might face in this space, which is like I mentioned before, establishing trust among the borrowers and lenders. Because we are talking about money here, trust is of like great importance. Also, depending on where you're operating in, there might be a cultural aspect where borrowers sometimes can feel not so great about letting others know that they are in need of cash. Culturally, in certain cultures, it's looked down upon. So people are very picky about discussing this outside. So when you have such cultural nuances, how do you deal with this problem? I think it's a pretty interesting and a difficult problem for a product manager to take on in this space. The next few points are all around, data. Getting user data is extremely hard. Uh, Part of the reason is because data is available in different silos. The other part of the problem is the lack of standardization of data formats. So imagine you are a lending company trying to gather all the documents from the borrower. Borrower A might be having bank statement from bank one. Borrower B might be having bank statement from bank two. Now, bank one and two may have bank statements in completely different formats. Imagine just scaling this problem at a regional level. If you're a player operating in Southeast Asia, where you're operating in 3-4 different countries, you're talking about exploring this problem in a linear scale, right? As many banks, as many countries, as many like parsing problems that you have. And the same goes for credit bureau reports as well, where there is lack of standardization. And then you add the language complexity. Some markets are English, some markets are Bahasa, some markets are different language, and so on and so forth. So lack of standardization of data format and data residing in different silos is a huge problem in the fintech space. And there is a lot of opportunity to solve this problem at scale. Uh, the last one is ability to underwrite using proprietary algorithm or interesting alternate credit signals is an area that is super challenging for product management, and you have to achieve that while maintaining low default rate, which is what makes it all the more difficult. And this is really where there is a lot of opportunity as well, because these are for borrowers whom the bank or the incumbent banks or the big banks deem as too risky. So you as a fintech lending startup, how are you able to smartly underwrite loans for these kind of borrowers is a big challenge, both a business as well as a product challenge, in my opinion. Moving on to the last set of challenges in the lending space, like I mentioned, there are different financial products. You could be talking about microloans, you could be talking about pay later, term loans, home loans, education loans, etc. So, as many types of financial products are there, as many workflows are there as well to underwrite and to service those loans. So as your business scales and grows in both volume as well as the diversity of these different financial products, it pays to actually invest in making your loan servicing process lean and automated. What comes in the way of this and makes it a difficult process is your business team would often come and request you for customization, where they want to customize fee for a specific product for a specific borrower because that borrower was of like strategic value to the company, or giving a favorable loan term to a specific borrower, or if, taking on restructuring of loans, like as a support ask from the business side. So these are all different ways in which business can come in the way of you trying to achieve standardization and automation of various servicing processes. And that's again an existential problem that PMs in this space will have to deal with. We already discussed about how scaling is extremely hard in this space. And then I also briefly covered about the fragmented market, especially if you're operating in the Southeast Asia region. You have various market-specific nuances, different regulators, different languages, different financial bodies, which all makes, going back to the standardization point, extremely difficult. With that, we have successfully come to the end of the lending sector. Moving on to the last and final part, which is trust and safety products. This space also goes by different names. You would often find fraud prevention, abuse prevention, business integrity, etc., all referring to similar areas. It's been an emerging area of focus for many B2C products for a few years now, largely headed by Facebook, YouTube, etc. I would like to split split what constitute into trust and safety into three buckets. So bucketed them as product risk, financial risk, and content risk. So product risk is, imagine you're an e-commerce site. How do you ensure sellers do not sell fake product or a damaged product or a legally restricted product in that country, or a wrong version of a specific product? So all these constitute as product risk. Uh, Abuses in the financial risk are where bad actors try to scam users on the other side of your platform through fraudulent behavior. So this typically happens via stolen credit cards. If you're an e-commerce player, again, sellers can take in a lot of orders but not fulfill them or run away with the money. If you're on the media space, that could be ad agencies violating your platform policy and making money off you. So those are the different varieties of financial risk. Moving on to content risk, which is probably my favorite area as well, is how do you prevent bad actors from proliferating harmful or hateful or intellectual property infringing content or abusive spammy content or collusive? If you're an e-commerce player, how do you prevent sellers from leaving positive reviews for their own products? Extremist or violence inciting content. How do you prevent all these various different types of abuses? And I've called it only these three buckets. There are probably way more number of abuses under trust and safety. And if you're working in an organization, depending on how big it is, there are at least like 4 to 5 teams allocated to each one of these buckets, solving these problems at scale, because each one is so huge in its own right. So having understood what trust and safety entails, what does a typical product manager do in this space? So product managers in this space generally operate behind the screens to ensure that all user groups of the platform have an abuse-free, trusted experience. Product managers in this space build one of the 5 things. They could be building ML models to proactively catch bad actors and prevent abuse, or they could be automating some of the trivial abuse cases through rules engine and automated rules. Product managers are also involved in building tools for internal investigators to be able to review some of these cases. Product managers also build, some end user experiences in trust and safety, but they're not of big scope like a B2C app. So these could be, building appeals experience for a good actor who you might have potentially identified as a bad actor. So how do you allow the good actor to be able to dispute your enforcement on them? Or the last one is how do you build affordances for your different user groups to actually report an abuse when they find something on the platform? So these are the different problems and different products that a product manager in this space builds. Some of the key metrics the PM in this space would be interested in are, if you're working in the machine learning with the machine learning models, precision and recall are of great importance. Probably FN score as well. False positives and false negatives are of great importance if you're working on automation. SLAs if you're working on the investigator-related tools or in that space. Appeal rate, especially successful appeal rate, is something that you want to keep an eye on if you're working on the appeals experience. And lastly, you'd be interested in the adoption rate of the tool if you're building tools for people to report abuses as and when they find. Now, having understood what a PM does, let's quickly look at how trust and safety is different from the rest of the sectors. Firstly, policy plays a significant role in this space, especially in terms of how abuse gets addressed. And these policies could be internal, or they could be industry standard, or they could be even regulatory policies, which the whole market and all the players will have to oblige by. Some of the key stakeholders for a PM in this role would be your legal, compliance, and your risk managers. These are the most important stakeholders and as important as your engineering and science teams are. The next interesting thing about this space is doing a user research is a little hard. Unlike a B2C app where you can show a prototype to your user and quickly get a feedback on how they like or don't like or how they use it, here you can't go ahead and ask a bad actor to show you how they abuse your platform. So that's part of why the space is so interesting and exciting for product managers, is to understand and be one step ahead of the bad actors. And I'll cover that in a bit more detail in the next session. And then the last part is conflicting stakeholder interest within the organization itself. So especially if you're a platform which has multiple user groups, say an e-commerce site where you have your buyers, you have your sellers, and then you have your brands. You typically find abusive actors in all these three user segments. And you would also have your internal teams aligned with each one of these different users, where the internal teams look after protecting the good actors in those respective user cohorts. So there is always a healthy tension in terms of how one team perceives a specific act of abuse and how the other team kind of receives it. So there's always a healthy conflict and a back and forth between different teams in the space. Moving on to the last part of the presentation today, which is the key challenges that PM is likely to face in this space. Uh, Staying a step ahead, like I mentioned before, is extremely difficult, and that's part of the reason why PMs even have a job here. Keeping an eye out for emerging abuse vector, reading about what's going on in a different marketplace, see how that might be applicable to where you are. Identify new risk signals to stay one step ahead of bad actors. Can you get proactive? Can you get a little creative and sort of proactively review some of the risky activities from bad actors and keep a close eye on them? So these are all very interesting ways in which you can tackle this problem and stay a step ahead. And like I mentioned before, your investigators and risk managers are your closest partners. And on a day-to-day basis, they are dealing with hundreds of cases. So just keeping a close partnership with them will definitely help you in understanding some of the emerging abuse patterns in the long run. The next biggest challenge in this space is balancing between building guardrails for good actor versus taking appropriate enforcement action against a bad actor. This is extremely difficult because, especially as you're working with machine learning models, you're prone to making a few errors where you're going to be enforcing some good actors or letting go of a few bad actors. So having this balance is one of the most difficult parts of being a product manager in this space. And then the last one is around automation. So the benefits of automation are very clear. So you depend less on humans, lesser overhead cost, and your SLA is generally much faster. However, you also run the risk of increasing your false positives and false negatives with more automation. And this directly can affect your upstream or downstream teams, depending on your organization setup. So these are some of the existential challenges of a product manager in this space. So with that, I have successfully come to the end of my long presentation. I hope this was useful to many of you. Like I mentioned before, if anyone wants to learn more about any of these different sectors in detail, hit me up on LinkedIn. I'm happy to share more. Until then, thank you so much for listening. Have a good day.